Alright guys, welcome back to the channel. So today I wanted to go over how to run the wheel strategy. Now this is the bread and butter of what we do here. This is how we sell options and continuously make money. Now let's go through the basics of option selling really quick, and then we'll get into the wheel strategy. So when selling options, it is done in increments of measurements called contracts. A contract is 100 units, as in 100 shares of some stock or 100 shares of some ETF. So one contract equals 100 shares. All right, now we got that out of the point. Next, we're going to talk about puts. A put is an agreed upon price. And if I'm selling a put, I say, if it falls below this price, I will buy that 100 shares. I will buy that contract. All right. But I get paid to do this. It's kind of like an insurance company. You pay them and they agree to replace your car if something happens. Does that make sense? So you are putting up money, and if the share price of the stock falls below the agreed upon price, you have to buy those shares. If it does not, then the premium they pay you to do this goes to you, and you don't have to do anything, and you do it over again. Now, a call on the other side is when you own 100 shares and you say, I'm willing to sell these at this price if it goes above this price, and they pay you for the right to be able to buy those shares. All right. So basically you have to own the shares in calls. You have to have the cash amount ready in puts. Now we do all this weekly. So that's what you're going to see in this example, because I will lay out how to run the wheel strategy, and I will give you a real world example that I have run, and I will show you my paperwork on it. So let's get started. Now on this infographic here that I have up on the screen, this shows the wheel strategy in principle. Okay, so at the top is where we start, and that's where we sell puts. So today's example is going to be Clean Spark. Back at the time of doing this, it was around $11. But basically what I said was, I'm willing to buy Clean Spark, the stock, 100 shares, which is one contract's worth, for $11. All right. And I kept doing that every week, and it never fell below $11. So I did that for 6 weeks. All right. Then one day it actually did fall below, and I was assigned. So as you can see on the right here, if assigned, sell calls. So now I got assigned, which means I own those 100 shares. I own that contract now. So I can sell calls. When you're selling calls, since you own the shares, they will pay you every week, in this case, a premium for the right to buy your shares. Now, after a period of time, which was 7 weeks for me of getting paid every week, I got assigned again. So when I got assigned again, the stocks got called away. What do you do next? You restart the wheel. You go back to selling puts, and round you go. And the point is to make that income every week. Now, sometimes along the way, you can sell a call that may be at $12 instead of $11 in this case, and make more profit that way. But generally speaking, when I run the wheel, I'm trying to get back out of my shares and back to puts, basically back to cash. So I almost always sell at whatever I was assigned at. But opportunities do open up sometimes. So let's actually talk about the trades that I did. So I'm going to go ahead and throw up. This is my wheel spreadsheet. Now, we track all of our trades to make sure that we are making what we say we're making. Now at the bottom here, you'll see all these are different stocks we sell on. This is Clean Spark. All right, and when you look at it here, I want you to look at the dates because I had Missy set it up so it would make sense. So on 6/6, you can see I sold a put. On 6/9, you can see I sold a put. On 6/13, you can see I sold a put. All the way down to this first yellow marker, which is 7/28, where I was assigned. All right. Now, the orange you're going to see are called buybacks. And basically what that is your put ends up being worth nothing but like $1, so I can buy it back for $1. But for the example here, the first one I sold was on 6/6. And you go over and you'll see the strike price I sold it at was $9. All right? And we got premium for that. Now, if you look at 6/13, we sold an 8-day for $8.50. That was the strike price. I got $8 for that. If you go to 7/21 here, all right, a 5-day, I sold at $11.50. I got $4 premium. All these are very safe. All right, I'm not trying to kill it. On 8/4 here, you can see that we started selling calls. So this is the paperwork just to show you how the wheel runs, but let's talk real numbers here. To put these in real world numbers, I want to lay out how this trade went. So I was selling on CleanSpark. As you saw, it was between $9, $11.50. The strike price went up and down. But what actually ended up playing out was I sold puts for 6 weeks. And during that 6 weeks, I made $34 premium. All right. Then I got assigned on 8/1. And I sold calls for 7 weeks and made $48. So after that, I got assigned out. Basically, I sold my shares. I sold the call on 9/19. I got my $1,100 I originally put into it back. And over 13 weeks, I made $82 off that $1,100. Now, if we take $1,100, which is the total basically I had on the line through the wheel, and that value on that contract with making $82 comes out to 7.2% over that time frame. Now, if you take that 7.5% and divide that out, it divides out to 0.57% a week. If we were to look at this from like a yearly standpoint with 52 weeks, 0.57 weekly times 52 weeks is going to come out to a 29.64% return a year. So on that $1,100, we would make essentially 30% for the year. All right, I need you guys to think about what I just said. Think about the numbers here. You can honestly and safely make 30% on your money running this wheel strategy. Now, there's going to be times the market's going to move a lot, and there's more ins and outs to this than as simply as I'm putting it here, but I'm trying to do this as a high level just overview of how to run the wheel strategy and show you how profitable it is and hopefully motivate you to go learn more. That way you can sell options and run the wheel strategy. Now, CleanSpark is probably not the best example here, but I'll be honest, all you have to do is look at my paperwork and see that I'm pretty reserved with what I sell at. I go pretty far out of the money, and what that means is I take on very little risk. I don't make as much as people that take on more risk, but I stay on the put side of the wheel most of the time. And the benefit to that is I don't ever own anything really, and I'm in cash mostly. And being in cash is king when you're selling options because you're not stuck in positions. So There's going to be other examples that I will sit down and do in the future, but I think this gives you a broad overview of how the wheel strategy works with a real world example put in front of you. I would not say you should sell options on CleanSpark, especially if you're new at this. It was just the example that I had available with the paperwork to back it all up. I do believe that anyone can make about 24 to 25% very safely every year, as long as they have the capital to back it up. Like I said, this trade itself, you would have to have $1,100 to follow it through. There's stocks that are cheaper, there's stocks that are more expensive. You can make any amount of money you want to make based upon how much cash you can put up. Now, our portfolio runs a little differently normally because we do work on margin, and that's a whole nother video coming in the future. I hope this video was helpful. If it was, take a moment, go down, smash that subscribe button, hit the notification bell so you can see all of our upcoming videos. Let me know down in the comments, do you run the wheel strategy? Do you sell options? And how has it worked out for you? If you're just learning, let us know down there that you're just getting started. Let us know if this video was helpful, and I'll see you in the next one.